Welcome back, everyone. Okay, we're going to be doing a DCF model on LAM Research. We're going to go ahead and try to find this company's true intrinsic value. As you know, the first thing we need to do is find a revenue growth rate. Now, this is kind of a funky one on this company. If you look at their last 5 years of growth, all of the years of growth were not very good until we just hit this last year where it was like 40% growth. But other than that, it was growing at something only like a 5% rate. I can only assume they hit what is kind of known as like an inflection point, and now they're doing really well. I don't know. But our average analyst over the next 2 years are expecting 15% and then following that 16%. I still don't know everything about them and why the revenue growth rate was so stagnant and then hit like 40% in the last year. You know, I guess you could almost say the same thing about a stock I like right now, Croc stock. I mean, it was very overall kind of like stagnant through the years and then hit an inflection point where like it caught on essentially. I feel there's somewhat of an unknown here, seeing as we only have 1 year where the growth was really good. So even though analysts think 15% followed by 16% over the next 2 years, for the purpose of our model, I dropped it down to 12% just to try to stay a little conservative. Now, as for a free cash flow margin that we need to apply to our model, over the last 5 years, they read as the following: 23.3%, 21.5%, 29.7%, 19.1%, and 22.1%. So, I mean, only one of them was a little below 20. The rest of them were above or way above 20. So I think 20 is going to be a good number to stick with. Okay, so we have our revenue growth rate of 12% that will apply over the next 5 years. And we also have a free cash flow margin of 20%. So join me on the screen for LAM Research. We grow them out by 12% out to the year 2026. Which puts it at about $25.7 billion in revenue. We then apply our free cash flow margin to those projected revenues, which gives us projected free cash flows into the future. We get our terminal value by applying a weighted average cost of capital and a perpetual growth rate. We need to remember to apply a discount rate, which I use 12% for the rate of return that I want. Now we add up all the values, divide by shares outstanding, and you get an intrinsic value of about 465.8, or we'll just call it $466 a share. According to the model, as of right now, LAM Research is a little undervalued. And I say a little bit because the stock drop that we had today put LAM Research at about roughly, as I just looked, $458 a share. The intrinsic value we got from this DCF model is $466 a share. So according to the model, it is a little undervalued right now, basically right at fair value. However, there is something else to be mentioned. At their last earnings, a share buyback was announced. A share buyback of $5 billion was authorized. And I mean, not for nothing, but $5 billion for the size of this company is quite a bit of shares to be repurchasing. And as we know, buying back shares can add tremendous value to a company, and I'm going to use this as an example to show you guys why. So based on current shares outstanding, we got a value of $466. However, I went ahead and did some quick math on my phone right now, and let's just call it a share price average that they'd purchase back of 500. I know that's over the current share price, but it wasn't long ago that they were at like 500. So I'm just going to say 500 just for the sake of an average. So $5 billion divided by a share price average of 500. And that gives us an average of 10 million shares that they would be repurchasing. For this company, that's actually a substantial amount of shares to be repurchasing because the current shares outstanding, and join me on the screen here again, is 138,700,000. So if we take 10 million away from that, that's going to put it at 128,700,000. And with just some quick math, if we just apply that new shares outstanding, working in the entire share buyback approved of 5 billion, instead of a share value of 466, if you count the entire share buyback of 5 billion, Now the intrinsic value would be 501.98 or roughly $502 a share. So yes, people, this is why share buybacks matter, just as much as this is why share dilution matters too. Share dilution strips value away from shareholders because it lowers the intrinsic value of the company, just as much as a big share buyback like this can make the intrinsic value go from $466 to about $502 a share. So the intrinsic value of them currently with no share buyback is $466, but if you want to include that entire share buyback that they've authorized, that's an intrinsic value of about $502 a share right now. Again, people, that is why share buybacks add immense value to the shareholders. Okay, everyone, thank you for watching. I hope you enjoyed the video, and I will see you in the next one.